We are back in the black hole of real estate, and U.S. home prices are up in year-over-year statistics nationally, and the Fed continues to hold interest rates in place, and consumer confidence is up in the month of July. This is your host, Ron Wysakarski, for the black hole of real estate. And let's start with home prices. FHFA, so that's the Federal Housing Finance Agency that we've quoted a few times this year. What they're showing is that prices are up 2.8% from last year across the country. And it also notices that prices in the South Atlantic, they call it Census Division, which includes Florida, home prices are up 1.4%. So the conversation about prices going down does not hold as much water, so to speak, as we're being led to believe. Now, they do provide a statistic that said that prices were down 0.2% during the month of May, and I guess that could happen. But overall, 2.8% increase across the board for the United States, 1.4% year over year for Florida. So for those that were waiting for 2008 to happen all over again, it still hasn't happened. Prices are not dropping through the floor. And there's nothing to suggest that prices are going to drop. And this probably falls under personal opinion. But I'm going to touch on it with the interest rates in a second. But my belief is if prices are holding firm or increasing, while interest rates remain in that 6-7% range like they have for about a year, then I believe that they have stood the test of time, so to speak. But also at some point the rates will probably come down and will make home monthly payments a little more affordable. But I also feel that when the rates come down a little bit, the prices might actually continue to go up by what they're going up, perhaps even a little bit more. I'm not saying a lot of bit more, a little bit more. But in most years, if we have this average of increase in the price of real estate over time, that number over 100 years has been 3-4%. So if we're at 2.8% and there's a little drop in interest rate between now and the end of 2025, is it reasonable to think that we'll be right around that 3% range? I think it will be. And I believe the messaging has been more than consistent going back the last couple of years, especially the forecast that I did November, December time in a few different podcasts that talked about where we would be. We would likely be with a 3% increase this year. Where I'm not getting it right so far is I thought rates would be lower by now. And if we stay up the political spectrum for as long as we can, there were several rate drops right before the election. Now, whether or not you want to believe that was to help a certain party win or another party make it harder for them to win, there was absolutely moving interest rates coming up to election day. And there hasn't been a decrease in rates since. So read into that what you will. Let your mind go to where it may. The Fed is certainly stating that they feel that there's a risk of inflation. There's absolutely a number of people that feel it's an overreach and that they're overcompensating for something that may or may not actually ever happen. This is going to be for you to make your own determination. And if we can stay off the political third rail right now, which I want to do, then I can say that there's strong evidence going past, all of this year, in the last year, that home prices have held. In the quarter over quarter, the month after month, and all year long, they've held and increased a little bit without the benefit of lower interest rates, which suggests to me that there's a market surge somewhere below the surface, and it may not be aggressive or dramatic or quick, but if we were to play the long game on this, if prices are holding firm at high interest rates, what do you think would happen if rates go down? And then give that some thought. We're absolutely seeing buyers make a purchase despite the rates because it's time to move. And delaying these moves over money is proving to be okay to make the move and not make the savings, so to speak. The proverbial time is more valuable than money conversation absolutely is taking place. People would rather be in the home that they want, the location they want, with the offerings that they want, slightly more than the money part that they want. So time and quality of life during that time is out leveraging the lower interest rate potential. People are making the purchase right now. We've talked ad nauseum about these rate guarantees over 3 and 5 years where mortgage companies will refinance you and waive other lending fees. That's absolutely on the table. I think people are taking advantage of that. Now, with the Fed, they've absolutely held firm in this belief that inflation is the biggest danger. Okay, let's just accept that. Let's not fight that. Let's assume, for the purpose of this conversation, that there's an inherent danger of inflation and that they need to hold interest rates where they are. Okay. There is absolute concern at some part of the Fed, although now there's some dissent in there. There was 2 voting members that dissented, which hasn't happened in, 30 years? That's been a long, long time. So now there's some visible evidence at the Fed that not everybody's voting like unanimously to keep these rates here. I think that the ground is shifting there, and my suspicion is we're still going to get 2 rate drops by the end of the year. I just thought we would have had at least one of them by now. And we're also hearing that not only is it inflation, but we're in fear of all the tariffs. We haven't seen what would happen with the tariffs, long term down the road. Agreed. But I would argue that what in life that takes a long time can you get an immediate read on? And do we always wait and wait and wait and wait until all the evidence is in way down the road? Because an entrepreneurial mind and spirit would take that information, do the best they can with it, and make some activity, some move. And if they're wrong, course correct. But if they're right, they're way, way ahead of the curve, because an entrepreneur is going to make moves that others are fearful of making. And in the heart of the U.S. and the amount of people involved in small business, my suspicion is there's a lot of energy and momentum within those conversations. Hey, if we can have some lower interest rates and a lower debt service cost on our current loss, or maybe refinance some of our debt, or probably make some investments in our business to grow our business at a cheaper time cost of money, I think there's a lot of people excited about that. And my suspicion is at some point as we get closer to votings and things that go along with that, including changing of the guard of the Fed, it's pretty clear the president is not going to rehire the current Fed chair, who is 7-8 months of borrowed time. I think that policy, he may not change. He may be very firm in that, but change is going to occur. And I do believe that in time we'll see lower rates. It may take the whole 7 or 8 months to get there. My suspicion is that it will come sooner, maybe with some pain. But at some point in time, if we believe the numbers we see, and I believe they're true, then the tariffs are putting a lot of money back into the U.S. coffers. And by balancing out some trade deficits, at least in the immediacy, it appears to be something that's working, or at least doing what they intended it to do. We'll see down the road. And maybe you could educate me or show me that a solid reason that it isn't working. All I see is that more money is coming in through tariffs to the U.S., which is helping reduce debt and balancing out trade. I have not seen anything of evidence that tells me that they're bad or not working, because I don't think the data's here yet to tell us that. So I believe applied faith might have, if you believe it's working, keep doing it. If you believe it's not working, find a way to make it not happen. But that's for others to decide. Oddly enough, when we look at U.S. consumer confidence, it actually rose in the month of July. Right now, what they're saying was in the month of June, consumer confidence was at 95.2. And that index, the Consumer Confidence Index, rose 2 points in July to 97.2. Now, I don't have the math behind it to tell you what it is. But if you think of short-term expectations for income and business and jobs and things like that, As those things rise, that's what consumer confidence is, all about. And those things are absolutely on the rise right now, because those are the numbers that we're being given, out of Washington. So it's the Consumer Confidence Board, Consumer Confidence Conference Board. These are the ones providing these numbers. I'd say Google them, get your own information, verify. But when I clicked on it, it said it was up from 95.2% or whatever they call it to 97.2 points. They're calling it points. So, to recap it, prices are up year over year. There's a lot of evidence out there. It's verifiable. Interest rates are still where they were. Have fun with why did they drop it 3 times before the election and not time since? You guys fight that battle. I'm staying out of that one. And consumer confidence is higher. So I think between tariffs and some things being implemented and maybe some momentum forward, the bottom not dropping out, maybe the market's going to be okay. I'm going to keep reporting on this and get you the best information I can to help you make great decisions, whether it's buying or selling, investing, or, hey, doing nothing. I just want to make sure that you got great information as we keep moving forward together. This is your host, Ron Wojciechowski, for the Black Hole of Real Estate.